Imagine this. The year is 1993. Three engineers are sitting inside a Denny's diner in San Jose, California. They have $40,000 between them. No office, no product, no customers. And they are about to start a company that, 32 years later, will be worth more than $3 trillion US, and at its peak, closer to $4 trillion. A company so powerful, so essential, so deeply embedded in the infrastructure of the modern world that the entire global artificial intelligence industry literally cannot function without it. A company whose chips power ChatGPT, Google Gemini, Meta AI, Tesla's self-driving cars, the world's top 500 supercomputers, and some of the most advanced military systems on the planet. That company, friends, is NVIDIA, ticker symbol NVDA. And today on Mano Invest, I am going to tell you the complete story from that Denny's diner napkin to the greatest wealth creation event in the history of the stock market. Whether you are a first-time investor who is just starting to understand the markets or a seasoned market watcher who has been following NVIDIA for years, by the end of this video, you will have a clear and complete understanding of how NVIDIA got to where it is, what the real financial numbers look like right now in 2026, and why this company may be the most important and also one of the riskiest investments you can make today. So do not skip ahead. Every part of this story matters. Let us begin. It all started on April 5, 1993. Jensenhuang, a 30-year-old Taiwanese-American engineer, sat down with two colleagues, Chris Malachowski and Curtis Priem, at a Denny's restaurant in San Jose, California. They had a vision: to build a chip that could handle three-dimensional graphics faster and more powerfully than anything that existed on the market at that time. In the early 1990s, personal computers were mostly doing two-dimensional graphics. The 3D gaming revolution was just beginning. Titles like Doom and Wolfenstein 3D were showing the world what immersive computing could look like, and the demand for better graphics hardware was about to explode. These three engineers believed that graphics processing would define the future of computing. With their $40,000 in seed funding from venture capital firm Sequoia Capital, they founded NVIDIA Corporation. The name NVIDIA is derived from the Latin word invidia, meaning envy, because they wanted to create a company whose products everyone in the technology world would envy. Their first product, called the NV1, launched in 1995. It was innovative, but it did not align with where the graphics industry was heading. NVIDIA lost a critical contract with Sega for a new gaming console. They ran out of money and had to lay off over half of their staff. Many companies would have folded at that point. But Jensenhuang is not a man who folds easily. He regrouped the team, studied the competition intensely, and in 1997 launched the Riva 128 graphics chip. It was a massive commercial success. Within 4 months of launch, NVIDIA sold over 1 million Riva 128 chips. The company was back from the edge. And then, in June 1999, NVIDIA went public on the NASDAQ stock exchange. They raised $42 million at an IPO price of just $12 per share. That same year, they launched the GeForce 256 chip, and Jensenhuang stood on stage and coined a phrase that would define an entirely new category of technology. He called it the GPU, the Graphics Processing Unit, a chip designed specifically to handle parallel mathematical calculations required for rendering complex 3D images in real time. Before NVIDIA, there was no such term. After NVIDIA, the GPU became one of the most important inventions in computing history. The 2000s were a decade of fierce competition and near constant pressure. NVIDIA was fighting hard in the graphics card market against its biggest rival, ATI Technologies, which was later acquired by AMD in 2006, and Intel, which was trying to build competitive integrated graphics. There were quarters of strong growth and quarters of painful losses. The stock was volatile. Investors were frustrated. But during all of this market noise, Jensen Huang was quietly making a strategic bet that almost nobody in the industry fully understood at the time. In 2006, NVIDIA launched CUDA, Compute Unified Architecture. CUDA was a software programming platform that allowed developers to use NVIDIA graphics chips not just for rendering video game visuals, but for any kind of massively parallel mathematical computation. Think about what a GPU is actually designed to do. It processes thousands of smaller calculations simultaneously, all in parallel. That's what makes video games look smooth and photorealistic. The GPU is processing millions of individual pixels, all at the same time every frame. Jensen Huang had a profound insight. This exact same capability, running thousands of parallel calculations simultaneously, is precisely what you need to train artificial intelligence models, run scientific simulations, process satellite imagery, model climate change, discover new drugs, and power the deep learning neural networks that were just beginning to emerge in academic research labs around the world. But here's the key point. In 2006, very few people were thinking seriously about commercial artificial intelligence. The idea of training a machine to recognize speech, translate languages, or generate human-like text was still largely confined to universities and research labs. NVIDIA was investing hundreds of millions of dollars into CUDA, essentially building an entirely new software ecosystem around their hardware with no guaranteed commercial return in sight. Analysts questioned the investment. Even some internal voices at NVIDIA reportedly questioned whether it was the right direction. But Jensen Huang held firm. He later said that the most dangerous thing NVIDIA could do was to play it safe. That decision, to build CUDA in 2006, is arguably the single most consequential strategic choice in the history of the technology industry. Without CUDA, there is no modern AI revolution as we know it. Fast forward to the fall of 2012. At the University of Toronto, a PhD student named Alex Krzyzewski, working under the supervision of legendary AI professor Geoffrey Hinton, submitted a research paper called AlexNet to the ImageNet Large-Scale Visual Recognition Competition, an annual international contest where computer programs try to identify and classify objects in photographs. AlexNet won by a margin so large it was almost embarrassing for every other competitor. But what truly shocked the AI research community was not just that AlexNet won, it was how it was built. Krzyzewski trained his deep learning neural network using two NVIDIA GeForce GTX 580 gaming graphics cards, costing a few $100s each. The research community immediately understood the implication. GPUs were the key to unlocking deep learning at industrial scale. Within months, every major AI research lab in the world, at Google, Facebook, Microsoft, Baidu, and hundreds of universities, began experimenting with NVIDIA GPUs for AI training. The results were transformative. Suddenly, systems that would have taken weeks to train on regular computer processors could be trained in hours on NVIDIA GPUs. The cost of AI research dropped dramatically. The pace of innovation accelerated exponentially, and NVIDIA, which had built its CUDA ecosystem for this exact kind of workload years earlier, was perfectly positioned to supply the entire industry. NVIDIA's data center revenue, which had been relatively small compared to gaming, began to climb rapidly. By 2016, NVIDIA launched its Tesla P100 chip, a dedicated high-performance CPU and AI accelerator designed specifically for data centers. The stock market responded powerfully. NVIDIA's share price went from approximately $30 at the start of 2016 over $220 by the end of that year, a gain of over 600% in 12 months. Analysts who had viewed NVIDIA purely as a gaming chip company suddenly had to revalue what this business was worth. By 2017, NVIDIA's total revenue reached nearly $10 billion. By 2018, the company's market capitalization crossed $100 billion for the first time.
Jensenhuang had predicted the AI revolution. He had built the tools for it, and now the world was finally catching up to his vision.
Now, we arrive at the moment that changed everything, not just for NVIDIA, but for the entire global technology landscape. November 30th, 2022. OpenAI, the artificial intelligence research company backed by Microsoft, launched a product called ChatGPT to the general public. Within 5 days of launch, 1 million users had signed up. Within 2 months, it had 100 million users, making it the fastest-growing consumer application in the history of the Internet, surpassing TikTok, Instagram, and every other platform that came before it. The world went AI crazy essentially overnight. Every government wanted national AI capabilities. Every major corporation wanted AI-powered products. Every startup founder wanted to build the next AI unicorn. And every single one of them needed one thing above all else to make it happen: NVIDIA's H100 chips. The H100, based on NVIDIA's Hopper architecture, was the most powerful AI training accelerator in the world. And demand for it was so overwhelming, so far beyond what NVIDIA could produce, that customers were waiting 6 to 9 months, sometimes a full year, just to receive their orders. Microsoft, Google, Meta, Amazon, Oracle, and thousands of startups were spending tens of billions of dollars collectively just trying to get their hands on enough H100 chips to stay competitive in the AI race. The H100 chip carries a list price of roughly $30,000 to $40,000 per unit. During the peak of the shortage, secondary market prices for H100 chips exceeded $70,000 each. NVIDIA had created a product so critical and so scarce that it was being treated like a precious commodity. The financial results that followed were unlike anything the semiconductor industry had ever produced. In NVIDIA's fiscal year 2023, total annual revenue was $26.9 billion. In fiscal year 2024, it jumped to $60.9 billion, up 126% in a single year. And in fiscal year 2025, which ended in January 2025, NVIDIA's total annual revenue reached $130.5 billion, up another 114% from the year before. $130 billion from a company that just a decade earlier was primarily known for making graphics cards for PC gamers. Now, friends, let me give you the most current data that is available to us as of March 2026. These numbers just came out, and they are genuinely historic. On February 26, 2026, NVIDIA reported its financial results for the fourth quarter and full fiscal year 2026, ending January 25, 2026. The headline number: NVIDIA's quarterly revenue in that single quarter was $68.1 billion. That is $68 billion in a single 3-month period. That represents a 73% increase compared to the same quarter just 1 year earlier, and a 20% increase from the previous quarter. For the full fiscal year 2026, NVIDIA's total annual revenue was $215.9 billion, up 65% from fiscal 2025's already extraordinary $130 billion. Let me repeat that. NVIDIA went from $130 billion in annual revenue to $215 billion in just 1 year. To put this in context, $215 billion in annual revenue makes NVIDIA one of the highest revenue technology companies on the entire planet. Their data center segment, the aichips division, is entirely responsible for driving this growth. In the third quarter of fiscal year 2026 alone, data center revenue reached $51.2 billion, representing a 66% increase year over year. The profitability metrics are equally extraordinary. NVIDIA's gross margin for fiscal year 2026 was approximately 71% on an annual basis, climbing to 75% in the fourth quarter. For context, a gross margin of 75% means for every 100 rupees worth of product NVIDIA sells, they keep 75 rupees after accounting for the direct cost of manufacturing. That is exceptional, even by technology industry standards. Most hardware companies operate on gross margins of 40 to 50%. NVIDIA is operating at nearly double that level. Earnings per diluted share for the full fiscal year 2026 was $4.90 US dollars on a GAAP basis, a 67% increase year over year. Jensenhuang himself, reporting these results, stated that computing demand is growing exponentially and that the agentic AI inflection point has arrived. He described the world as entering what he called a virtuous cycle of AI, where AI infrastructure demand feeds more AI capability, which drives more demand for infrastructure in a self-reinforcing loop. NVIDIA also has a massive buyback program in place. The board of directors authorized an additional $60 billion US dollars for share repurchases on top of an existing authorization. This signals tremendous management confidence in the company's future cash generation ability. Additionally, NVIDIA was named as a key technology partner for the Stargate project, a $500 billion AI infrastructure initiative backed by the United States government involving OpenAI, Oracle, and SoftBank. NVIDIA is not just a chip company, it has become a piece of critical national and global infrastructure.
Now here on Mano Invest, I will always give you the complete picture, the good and the challenging, because investing without understanding the risks is not investing, it is gambling. So let me walk you clearly through the key risks that NVIDIA faces right now. The first and most immediate risk is the U.S.-China export restrictions situation. The United States government has been tightening restrictions on which NVIDIA chips can be exported to Chinese customers. In April 2025, NVIDIA was informed that it now required a government license to export its H20 chips, which were specifically designed to comply with earlier export rules, to China. As a direct result, NVIDIA had to take a $4.5 billion charge in a single quarter for H20 inventory and purchase obligations that suddenly became worthless overnight. That is a significant one-time hit. China was historically one of NVIDIA's most important markets. Any further escalation of these restrictions represents a meaningful risk to future revenue. The second risk is competition. Right now, NVIDIA has a near monopolistic position in high-performance AI chips, but competition is building. AMD's MI300X chip has been gaining traction with enterprise customers. Intel is investing heavily in its Gaudi AI accelerator line. And most importantly, NVIDIA's largest customers, the hyperscale cloud companies like Google, Amazon, Meta, and Apple, are all developing their own custom AI chips in-house. Google has its Tensor Processing Units, or TPUs. Amazon has built Trainium and Inferentia chips. Apple has its M-series and upcoming AI-specific silicon. If these companies succeed in reducing their dependence on external NVIDIA chips, it could meaningfully affect future demand growth. The third risk is valuation. At a market capitalization of over $3 trillion US dollars, NVIDIA is one of the most expensive stocks in the world by almost any traditional metric. The stock trades at a high price-to-earnings multiple that essentially prices in years of continued extraordinary growth. If there is any slowdown in AI infrastructure spending, perhaps due to a global recession, a geopolitical crisis, a technology breakthrough that requires less GPU compute, or simply a natural pause in capital expenditure cycles, the stock could fall very sharply and very quickly. NVIDIA is not a stock for risk-averse investors. It is a high-conviction, high-volatility position that requires deep understanding and a strong stomach. No discussion of NVIDIA is complete without understanding the man who built it. Jensenhuang was born in Tainan, Taiwan in 1963. When he was 9 years old, his parents sent him to live with relatives in the United States. He attended a boarding school in Kentucky. As a teenager, he worked as a busboy at a Denny's restaurant in Oregon. He went on to earn a bachelor's degree in electrical engineering from Oregon State University and a master's degree from Stanford University. He worked as an engineer at AMD and at chip manufacturer LSI Logic before co-founding NVIDIA at the age of 30. What makes Jensenhuang truly remarkable is not just his technical expertise, it is his extraordinary patience and his ability to hold a long-term strategic vision while managing short-term pressures. The CUDA investment took 6 years to produce meaningful returns. His push into data center computing was questioned for years before it paid off massively. His willingness to stake the company's resources on bets that the rest of the industry dismissed is the defining characteristic of his leadership. He has also been deeply involved in every major product decision at NVIDIA for over 30 decades, an unusually long and consistent tenure for a technology CEO. Today, Jensenhuang's net worth has crossed $100 billion, making him one of the wealthiest individuals on the planet. He is recognizable worldwide, often wearing his trademark black leather jacket on stage at conferences and product launches. He is, by almost any measure, one of the most impactful business leaders of the 21st century. So what does the future look like for NVIDIA? The company is already working on what comes after its current Blackwell chip architecture. At its annual GTC developer conference, NVIDIA unveiled the Rubin platform, its next generation of AI computing chips. According to NVIDIA, the Rubin architecture is designed to deliver up to 10 times lower cost per inference token compared to Blackwell. Inference, for those who are not familiar with the term, refers to when an AI model is actually running and serving responses to users, as opposed to training, which is the initial process of teaching the model using massive data sets. As AI deployment scales from millions to billions of users globally, inference workloads will become increasingly dominant. NVIDIA is positioning Rubin to capture that next wave. Cloud providers including Amazon Web Services, Google Cloud, Microsoft Azure, and Oracle Cloud Infrastructure are already committed to deploying Rubin-based systems as soon as they become available. NVIDIA is also expanding powerfully into what Jensenhuang calls physical AI, artificial intelligence that moves out of purely digital environments and into the physical world through robots, autonomous vehicles, smart factories, and connected infrastructure. NVIDIA's platforms for physical AI include Jetson for edge computing and Thor for automotive applications. Companies like Figure AI, Tesla, Boston Dynamics, and dozens of humanoid robotic startups are building products that depend on NVIDIA's AI processing capabilities. The market for physical AI and robotics represents potentially the next multi-trillion-dollar computing wave. For fiscal year 2027, Wall Street analysts are currently projecting NVIDIA's annual revenue could reach somewhere between $250 and $300 billion, assuming continued robust AI infrastructure investment by corporations and governments worldwide. Nations across the Middle East, Southeast Asia, Europe, and the Americas are all building sovereign AI infrastructure, often with NVIDIA as the primary hardware partner. NVIDIA's competitive moat, built over 30 years through hardware excellence, the CUDA software ecosystem, and a network of developer relations, makes it extremely difficult for any competitor to displace them quickly. Friends, let me bring it all together for you one final time. NVIDIA's story is one of the most powerful business and investing stories in the history of modern capitalism. 3 engineers, $40,000, a diner booth in San Jose, 32 years of extraordinary vision, painful setbacks, bold strategic bets, and relentless execution. From selling graphics cards to gamers to becoming the engine that powers the entire global artificial intelligence revolution. From a $12 IPO price to a multi-trillion-dollar empire that shapes the future of computing, medicine, science, and national security.
The lesson for investors from NVIDIA's story is profound. The greatest wealth in the stock market is almost never created overnight. It is created by companies that identify a fundamental technological transformation before the wider market fully understands it, build the tools and infrastructure for that transformation, and then hold on through every period of doubt, competition, and volatility until the world catches up to their vision. In 1999, nobody was buying NVIDIA stock because of AI. In 2006, almost no investors understood why CUDA mattered. In 2016, most of Wall Street still categorized NVIDIA primarily as a gaming hardware company. The investors who understood what NVIDIA was really building and held through every difficult period have been rewarded beyond almost any other investment in market history. Does this mean you should go and buy NVIDIA stock today? Friends, that is not a question I can answer for you. I am not your financial advisor. What I can tell you is that NVIDIA is one of the most strategically important, financially powerful, and technologically dominant companies in the world as of 2026. It also carries real and meaningful risks that deserve serious consideration. The right decision for you depends entirely on your financial goals, your risk tolerance, your investment time horizon, and your overall portfolio strategy. Please study it carefully, consult a professional, and make the decision that is right for you. And that, my friends, is the full story of NVIDIA, from a Denny's diner napkin in 1993 to $215 billion in annual revenue and a $3+ trillion market cap in 2026. I'm Mano, and this is Mano Invest, where we break down the most powerful financial stories, the biggest companies, and the market trends that matter to everyday investors like you and me.